Are the ASX uranium companies ready to rally again? We're going to have a look at some companies that have already broken out of their bases and shown that they're pushing higher and faster than the markets, and then those other uranium companies that haven't yet broken out and are in that congestion pattern. This is Finder Market Points, where we connect the leading market themes and the top performing companies for better trading. Now, we're having a look at the uranium theme at the moment. It has been on the nose for a little while after a phenomenal run a few months ago. But it's trawled out a bit of a bottom, had a bit of a rally throughout that April period that we can see on the chart here, and then been pushed back down. Looking at Silex Systems here, SLX. Now they're trading on that 200-day moving average, that red line, which we've had that congestion period, that real base. See, we've got a lot of tight movements. We've had rallies and pullbacks, but in this period throughout May, it's really tightened up. If you had Bollinger Bands there or average true range, you'd see that that's really tightened. We've also seen the volume drop off significantly throughout this compression. What that tells us is that the selling has somewhat been depleted. It's also coming around that 200-day moving average. We're not so much seeing accumulation, but we've just seen that lack of selling coming in. Silex in the last couple of days has broken out. Now, if that's a pocket pivot that we see here on this day here, the 30th of May, we've covered that strategy in details from Gil Morales and Chris Karcher. So you can click on screen or the link in the description below to learn more about pocket pivots and timing trades from breakouts like this. So Silex is one of the best. We see the month performance is only up 1%. The rest of the uranium companies have not performed very well over the month, but that's why we're seeing this congestion. That's what we're going to focus on, the really tight closes for all of these companies here. The next one we're going to have a look at is Boss Energy BOE. Zoom out, we'll get a similar sort of story. We know the rally, it broke out, good strong uranium, bit of a pushback, and then uranium was in favor and it traded very well. April, same thing, came up, pushed new highs, seeing many movements happening across the globe and favoring uranium once again after a 10 or 11 year hiatus. We don't need to get into the political aspects of that now. We are just looking at the charts, and what we see in May is a similar thing to Boss. In this congestion compression that we saw under the 200-day moving average, the red line, and then we see those tight closes. Not quite inside days, but very tight closes within next to each other. Sort of 4 tight days there, then a bit of a pop-up. Ideally, we would have seen more volume as an indication that this is ready to get over and push through the 200-day moving average, but it gaps up the next day and the following day to say that it's well and truly underway. It's putting that 200-day moving average behind it. So that's BOE, and it was one of the first ones to break out, as you can see, only a couple of days ago. Later on in the list, we're going to see some that haven't yet broken out of this congestion period. Now, the reason we're looking at this whole group together and the congestion period, this similar sort of charting pattern, is because time and time again, they do the same thing. We've seen it many times with the lithium miners over the last 12, 24 months, and we've highlighted that where one breaks out, like we see here with Boss, it can be up to 2.5 months later that other companies are breaking out of similar patterns and following that same movement. And this is nothing new. We've seen it for over 100 years in the markets. But we're focusing uranium companies now. So we'll have a look at the next one, which is Bannerman, BMN. Bannerman, 19% for the week, down 4% for the month. Kind of flat for the quarter as well. No surprise to see where the rally was, where uranium companies were really in favor. But we've got this congestion period in May once again. So we're coming down, almost retesting the lows. If you know springs, so Wyckoff spring trading strategies, that's almost a spring there. It's a bit of a retest. So come down and have a look at that. We're seeing the selling depleted. You can click on screen to understand the springs, another trading strategy we've delved into. We're not going to do that right now, but that's what we're looking for here. And then it can be a pocket pivot. It's not quite 10 days show, so not a pocket pivot on the breakout, and it's under the 200-day and the 50-day, so we wouldn't be calling that for Bannerman. But we're using that to show that there is support within the group, and we want to find ones that have better trading patterns. So we move over to Alligator Energy AGE. 14% gain for the week, down 12 for the month, flat for the quarter. You're seeing a similar theme here. We know where the rallies come from. We see where the volatility is compressed. That's actually a volatility contraction pattern in itself, and that's a good strategy. We've actually created a download to run with that because it's such a great strategy for trading thematics, especially commodities when they're in favor. So that's a click on screen and see the details below. But May, we want to have a look at May. We've come back to the 200-day moving average. We've seen that volatility tighten up. Look at these wide ranges here. and then it's really tightened down on the 200-day moving average, that red line. It's compressed along it. We had an inside day, but it broke down here. So wide range and then inside day. We're not quite getting them staying within the inside days, but we are seeing tight closes. There's another inside day, but it doesn't last more than one. However, this is tight close. It's compression, Bollinger Band, average true range, however you want to look at it. But we then see it pop up. You can see if I move the cursor over to the left-hand side, it's going to make it disappear. But the volume box that's over there, interesting it's staying because I've held my cursor down. Look at the volume box over here, this green one. We want to see this green candle, the one where it's broken out over the swing high, through the 200-day moving average and off the 10-day, that blue line. We want to see the volume for that day, 222s where it's starting. We want to see it bigger than this day here. It is 2040. So that means that it is a pocket pivot breaking out of that congestion. The problem is it's under the 50-day moving average, so it doesn't necessarily tick those boxes. But when we're seeing the power of this whole uranium thematic moving at the same time, that's when we look at this and say, okay, well, is there a buy in there for me? Can I get a low risk, high reward trade here? Maybe putting a stop under this swing low, buying around this sort of entry here at the swing breakout, and then looking for a profit target up here. They're the kind of trades that we look for. We're going to move over from AGE over to Toro Energy TOE. Now, Toro's up 5% for the week, down 10% for the month, and flat for the quarter. Same story, see the rally August, September, we all know that. It's the congestion here in May, coming back and retesting lows. The slowdown, the shortness of thrust, slowing down at the selling, the drying up of the volume, all the way down here, it's just not being sold down anymore. The sellers have stopped coming to market. We haven't seen the buyers come back in yet, and that's what we're starting to see in some of these companies in the last few days. So we're seeing that Toro Energy is starting to turn that corner as well. We move from Toro. The next one we move into is Deep Yellow, DYL, down 22% for the month. What we've seen here is a good strong candle. This 30th of May breaks out over the swing high, does it on a strong candle, opens low, closes high, brilliant movement, and much higher volume than we've seen for many more days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Is it the highest in 10 days? Let's look at the volume on the left-hand side, 1628 versus 18. It is the highest. That is a pocket pivot. Would it have been over the 50 and 200-day moving average? But it does give us confidence to see that there's more buying volume in this up movement than we've seen any down days selling in the last 10, and this is that compression period. So that's a tick in the right box for DYL. Next, AEE, or Energy, 17% for the week. So you're seeing coming from these lows. This is spring right here. Comes down and retests it. The falling has happened on anemic volume. Look at that. There's barely any volume happening between 23rd, 24th, 25th of May as it's fallen. Selling's depleted. It's just not happening. Turns the corner, has a wide range for the whole day and does it on minimal volume. Still says, okay, well, that selling's depleted. It didn't come down here at 18 cents. It didn't flush out any more stops, didn't trigger them. And then the next day, okay, we've got tighter range, but big volume. As the buyers come in and say, okay, selling's over, let's go. Still under 200-day and 50-day moving average, so many traders will see that not be a trade at this stage. However, we are using this to show the support of the whole uranium space. So that's what we want to be seeing. More and more companies breaking out of a semi-congestion pattern around the same time. Moving from AEE over to Lotus Energy. LOT, 7% gain for the week, 19% drop for the month, 6%, 7% drop for the quarter. Still within this compression here, under the 200-day moving average, just on those swing high right here, but really we want to see it break this swing high that we see on the 16th of May, push through that. We want to see that with volume. To get through this swing high, it's going to be doing it at the same time as the 200-day moving average, and then breaking through. It's going to be coming up to another swing high back over here, but that is a fair bit older. Pushing through that, then we want to see it coming up towards 50-day moving average. This is where we look for those lower risk, high reward trades. Can we get one in there? Leave that for you to decide. Lotus Energy. Next one is 92 Energy. 92E is the ticker. 5% gain for the week, 20% drop for the month. Big down move here, but rounding out this base. See how it's really shortened and it's turned a bit like a hockey stick in one way. Under the 200-day moving average. See these lower wicks, it's showing that throughout the trading day, it's being accumulated. It's being belted down, some are hitting it, but they're not able to stay down. The buyers coming towards the end of the day. And we've seen this movement even down the bottom here. Now, we're not seeing exhaustive volume. We saw some big volume here on these wide days, and then it tightens up. That selling has stopped. The selling pressure has slowed down dramatically. Even look at these volumes here. Once again, 24th, 25th, 26th May, we saw some similar periods, low volumes of some others. Congestion tightening up and then moving up towards the 200-day moving average, but well off the lows on these days for intraday trading. That's 92 Energy. Moving over, EL8, Elevate Uranium, down 21% for that month. We've seen it move into this period, but we haven't got a full month yet in this compression. And these tight ranges, once again, after that month or 2 months of dropping, tight ranges on the 200-day moving average under the swing high, and we did have a big green candle with a strong bar down here, decent volume for the period. That's positive movement for EL8. It hasn't broken out yet, but we'll be having that on the watch list. VMI, Vimy Resources, 22% drop again for the month. Still showing the same movement, down for 2 months or 6 weeks or so. Selling is depleted, volume drying up. Really shows that it's turning the corner here, up to swing highs under the 200-day moving average. Breaking through it, can see some positive movements. The final one in this list we're looking at is Peninsula Energy, down 29% over the month. The story is still the same. This one's well and truly off the 200-day and 50-day moving average, so some traders will just leave that one behind and use it as a bit of a canary in the coal mine and more support for the thematic. The more we see these companies work together, the more we see the uranium-exposed companies on the ASX show similar sort of movements, falling, getting under 200-day moving average, slowing down, volume drying up, breaking swing highs. The more we see these companies seeing it together, the stronger that thematic is, the more likely it is that we see similar trades to what we've seen before. Let's bring one out here to show when we see this strong kind of rally, this massive breakout. So what we're seeing here is high and tight flags. We won't go into that one in too much detail, but 100% gains and then another 100% rally from there. That's what the high and tight flag looks for. When we see these types of rallies, we know statistically that for a company to break out, to run hard for 100% and then to do it again in a short period of time, it's twice as likely to make this gain, make this profit target, if the whole group and thematic that it's in is running with it. If it's got that tailwind support, the industry, whether it's a commodity price, macroeconomics, geopolitical tensions, whatever it is, we want to see the whole thematic moving together and strong volume moving throughout. We've seen the volume dry up together. We see the volume come back. That's where we do see the best trades that we see for the year. We only get a few periods each year where we get the phenomenal runs, and that's what we look for when we see the thematics work together. That's it for uranium that we're going to cover now, and we'll come back again with another thematic later on. Now, if you want to learn more about thematics and how they break out together, you can click on screen in the top right over there. If you want to follow more of the leading thematics and what we call the top 6 shares in play of each group, you can click in the bottom right over there, and they're the leading groups on the ASX. You can also subscribe to the channel for updates, click the bell so you get alerted when the most recent videos come on out.